Labo becomes simply impossible to ignore. They had no outside capital, no prolonged brand development phase, no traditional product road mapping, no wholesale rollout, no exit plan.
Hey, welcome back to Ecommerce on Tap, brought to you by Sourcify and Izba. I'm your host, Nathan Resnick, joined by my co-host, Aaron Alpeter. Aaron, for those joining for the first time, do you want to give a quick introduction of what we do on Ecommerce on Tap?
Absolutely. So every episode, we take a well-known D2C company. We tell their founding story, reverse engineer their supply chain, talk about their X potential. And this season, we're focusing on fragrance. And so we've done deep dives into the industry itself, into Fleur, into Deadcool. And I'm really excited for today's episode as well.
So am I. But before we dive in, got to ask, were there any quick tidbits that caught your eye the past week?
Yeah, I was actually at Cosmoprof in Miami, which is a large beauty conference, kind of very international flair. So a lot of Latin American countries or suppliers would come to Miami, and you have people from all over the world there. And the fragrance section was just a complete takeover. I mean, there were booths, if you can call them that were probably like 100 feet by 100 feet. They had like live violin that was going on. They were giving out champagne, all to sell a fragrance. And so I I learned very quickly how much money there is in fragrance and how much money there is to be had in these sorts of trade shows.
That's awesome. Any key takeaway from it?
Yeah, I sat through a couple of sessions, and there was one thing that stuck out to me. It was that in LATAM, so South America, over the last 5 years, the top 5 fragrance brands had a market share of 46%. That dropped to 38%. And so the top 5 brands have lost 8 percentage points of market share. And this is despite those brands growing at 15%. So they're growing at 15%, double digits, and they're still losing market share. And that's because the rest of the market is growing at 27%. And it just was really interesting, kind of what we've talked about over the last couple of episodes, where consumers are actively searching for something new. And so even if you're a legacy brand, even if you're doing hundreds of millions of dollars, and even if you have double-digit growth, the market is still moving on looking for something new.
That's awesome. Very cool. Yeah, this season's been pretty fun. We just covered Deadcool and Fleur, and now today we've got a pretty amazing story as well. So I'm excited to dive in.
Yeah, we're going to talk about Labo, and this episode's going to focus on an acquisition that reframed how the industry approaches fragrance. And I think Labo is kind of the perfect example of showing how fragrance has changed and evolved to get to where we are today. And when we look back at major beauty and fragrance acquisitions of the last 50 years, it's pretty easy to say, they were all about scale. It was built bigger distribution, bigger launches, bigger brands, but that's not really the case anymore.
Yeah, I think what they were really about was risk, just a very different definition of risk than we use today.
You're right. In the 80s, 90s, and even the early 2000s, risk meant being too small. That's the one thing you didn't want to do. You didn't want to be too narrow. You didn't want to be too dependent on a single founder or a single point of view. And if you wanted to be acquired, you had to prove that you could be predictable. And so you optimized for things that would travel very, very well. This is why you had so many celebrity brands, celebrity partnerships. There's a lot of focus on department store velocity and launch after launch after launch of all these new fragrances, flavors, flankers, etc. And so if you could do that, you had the opportunity to fit cleanly inside a portfolio, and you wouldn't surprise anybody. And that was what was considered to be success.
But I think somewhere along the way that equation flipped, right? Because once everyone could scale stopped being scarce. And I think what became scarce was actually relevance. And so suddenly the risk wasn't that a brand was too niche. It was that the risk was that it didn't mean anything.
I think you're absolutely right. And that's the shift that we are really going to dive into today on this episode. It's not when conglomerates start buying smaller brands. They've always done that. But it's when they started to buy restraint, taste, and credibility as really the core assets, the core thesis for why they bought a brand.
Yeah, and I think that leads us to a very different definition of success, right? Not can this brand be everywhere, but should it be really?
Right. And once that question enters the acquisition math, everything changes. And what founders build, what buyers look for, and what exits are actually rewarded.
Yeah, and I think to understand that shift, we should look at how acquisitions worked before in this space. and why a brand like Labo ends up, sitting right at the center of that change, really.
Yeah, we're just going to start within the 1950s. So we'll call this the pre-conglomerate era. And this is really something where fragrance is a craft, it's not really an asset. And in the mid 20th century, fragrance brands weren't acquisition targets at all. Most fragrance houses were founder owned, single brand businesses, and they were tightly linked to couture houses or individual perfumers. And control really lived with these founders and their families. And growth in these types of businesses really came from launching new scents, expanding into more department stores, and fashion licensing. And as a result, there was very little M&A in this space. Fragrances were seen as products, not platforms. And so success meant having cultural events and longevity, not exit potential. And there really was no incentive to design a brand to be acquired yet because the buyers on the other side of the transaction didn't really exist in any meaningful number. And then, so that's kind of where things were in the 1950s, 1960s, 1970s. And then when you get to the 1980s, and you start to see fragrances become a little bit more of an asset class. And this is where the market begins to change a little bit. Large companies woke up to the fact that fragrances had really attractive margins and that brand equity often outlived the founders who started these perfume brands. And so they said, hey, we can leverage all of our distribution capability and we can extract even higher margins by putting these things together. And so this is where you see companies like Estee Lauder, LVMH, L'Oreal start to assemble portfolios, and they start to acquire brands instead of building everything in-house. And the logic on their side was actually pretty simple. They said, let's buy brands that are already working, let's keep the front end pretty distinct, but let's centralize the back office, the supply chain, the distribution, all that sort of stuff. And we're going to grow these things through scale. If they're only selling in France, we're going to take them to the US. If they're only selling in North America, we're going to take them to Asia. And these acquisitions were typically full acquisitions. They were focused on size, reach, predictability, those sorts of things. And these acquirers would ask questions like, can this brand get big without creating any surprises for our business? And so that's really where things were in the 80s. And then you get to the 90s, and the conglomerates themselves start to mature. And they start to focus not just on growth, but on cash flow stability. And they really want a durable brand. They want ownership control. And they become really good capital allocators. And so if you look at Estee Lauder as a really good example, they IPO'd, and I think it was 1995, but the family who owned Estee Lauder maintained voting control through like the dual class share system. And what they did is they IPO'd, they owned a percentage of the business, and then they used cash from operations to purchase share of the non-voting stock. And so what this ended up doing is they ended up offsetting the dilution and basically tightening their control of the business, owning a higher and higher percentage without actually having to buy anything themselves because they removed the other shareholders. And so this kind of created this flywheel for them where they said, hey, we're going to grow these brands, we're going to generate cash, we're going to consolidate ownership, we're going to acquire, rinse, repeat, keep doing that over and over again. And so by the early 2000s, these companies were really no longer collections of brands. They were capital allocation machines. And this is why they leaned so heavily into celebrity fragrances, because they were very predictable. They were scalable. They were replaceable. If one celebrity fell out of favor, you just get another one and kind of keep that flywheel churning. And so success was really defined by volume and velocity, not really by meaning of any particular brand.
Yeah, I mean, this feels like big business as I would imagine it, and something that you would look to do to maximize a share price, scale, or profits. I'm curious, I mean, how did consumers respond to this?
That's a good question. So, as we talked about on some of the other episodes, in the early 2000s, consumer behavior began to shift as consumers started moving away from celebrity driven launches and kind of scent profiles that all smelt the same. And they felt more attracted to founder stories, craft, authority, authenticity. And this didn't mean that the acquisition strategy changed, but there was some doubt that was entered into these conglomerates as a result of the consumer shift. And so they began to experiment with prestige and niche acquisitions, more as a hedge to what they were doing versus anything else. And so at the time, these deals were viewed as exceptions or brand building or credibility plays. And so one example is an acquisition that Estee Lauder did in 2006 of a brand called Frederic Malle. And it was a really small brand at the time. It was only doing $20 to $30 million. They bought the whole thing, but they kept Frederic Malle, the perfumer, on as the creative director. So it was an interesting kind of play there. where in the past they may have purchased it, gave them the money, and sent them onto an island somewhere. They said, no, keep working with us. Let's keep doing what you were doing, but just under the Estee Lauder family. And they really did something where they were emphasizing the perfumer in this case. So it wasn't a celebrity that they were leaning into. It was Frederic Malle, the person who was coming up with these perfumes, who was the hero of this particular brand. And so he would go through and author and sign each scent that he created. And he positioned himself as more of an editor, not necessarily a marketer. And, Estee Lauder tried to professionalize the back end and wanted to also protect the uniqueness of the front end. I think we're going to come back to this example in a little bit, but both the founders and the acquirers generally view this as an exception when it came to deals that were happening in this space. And if you look at the other deals that were going on around this time, you've got Estee Lauder, purchasing other brands. You've got Coty, which partnered with like Britney Spears and Calvin Klein and Marc Jacobs, and Adidas, which was throwback to middle school Aaron. That's what I wore for a little bit. L'Oreal acquired YSL Beauté in 2008 for 1.15 billion. And so this was a massive global distribution and a strong licensing deal. And I didn't know about this. Did you know that P&G used to own perfumes and fragrances?
I didn't know. I had no clue.
Yeah, it's kind of odd. They purchased Gillette in 2005, and Gillette actually had some fragrance brands that went with that acquisition. And they tried to run these brands for about 10 years, like you would with CPG, but they ended up selling these to Coty. So these were like Gucci, Hugo Boss, Dolce & Gabbana. Could you imagine P&G owning Gucci and trying to deal with that? Like, I couldn't figure that out.
Yeah, that's pretty wild.
Yeah. So, I guess to summarize, if you were a founder who was building a fragrance brand for most of the last couple of decades, there was a very specific model that conglomerates said that they were rewarding. Get big quickly, build massive distribution, and aim for a fragrance that's universal. And this is what people did. And what's so interesting about Labo is that they completely rejected it. And in doing so, quietly changed how founders think about what success in fragrance actually looks like.
Yeah, I think you hit the nail on the head, right? And I think now, in order to meet our founders, we've got to go to New York in the early 2000s, where two Frenchmen, Fabrice Pinot and Eddie Rochi, decided they want to build a different type of fragrance house. And unlike the founders of Fleur or Deadpool that we previously covered, who were self-taught or industry outsiders, Fabrice and Eddie were basically as inside as you could get in this industry. So Fabrice worked in a large fragrance house where he, really was exposed to kind of industrialized fragrance development, trend-driven launches and, marketing-led product decisions. And Eddie, on the other hand, had a background in fragrance distribution and retail, specifically bringing fragrance to market versus, just creating it. And so he understood how fragrances were sold, how stories were constructed, and how retail, shaped perception of fragrance, right? And so, in other words, they both, understood exactly how the current system worked, and in fact, were kind of, turned off by it. And so they both shared a frustration with how fragrance was being treated as a kind of disposable, and a belief that the industry had really, actually lost respect for the product itself. And so I think for them, it was kind of a sense of ritual for fragrance that had been stripped away in favor of mass marketing, celebrity deals, and the likes. So they decided to form a partnership, not necessarily to find, white space in the market, but more so about correcting a direction that they felt the market had gone wrong.
This is so interesting because you can definitely tell that they loved fragrance just by what you were saying there. What exactly did they feel was wrong with the market? What were they trying to correct?
Yeah, there was a kind of few things that stuck out to me. I think number one, they rejected companies treating fragrance as marketing artifact instead of actual product. So, at this point in the fragrance industry, there was a ton of celebrity-led launches, seasonal releases, and just, scent profiles that were driven by trend reports. And they, really believed fragrance had become too loud and too empty. I think secondly, they rejected the idea that faster meant better. And so they pushed back on kind of rapid flanker cycles, constant novelty, and just launch velocity as a success metric. And thirdly, I think they believed that the push to make universal fragrances was producing these kind of forgettable products, right? i.e. fragrances that, designed to offend no one. They wanted to, stand out with their fragrance and, really be different. And most fragrances kind of have this broad appeal at the expense of character. And so I think to, be clear, they decided when they were founding, their own fragrance house that they had kind of several core beliefs, right? So number one, fragrance should be treated like a craft, not content. Number two, perfumers should be credited, not hidden. Three, products should age, not expire. Four, a smaller audience that cares better than a mass audience that doesn't. And number five, last but not least, the ritual and the process matter as much as the formula here.
Wow, that's I love those five things there. It seems that they had a very specific mindset, and I would imagine were kind of rare at the time. How did they find each other? You said they were both in New York, but I mean, there's lots of people in New York, and like, how do you actually find this and say, hey, we want to do this?
Yeah, I mean, I think they were actually noticing these same things independently, right? So, the emptiness of fragrance, the, over reliance on marketing language, all of these things they both noticed independently. And they were both, deep insiders in the industry, but I would say they were kind of uneasy insiders because, they knew each other tangentially by being in the same industry and, having the same conversations and retail environments and being in the same culture spaces in New York, but they both, felt that fragrance had become more performative and it was all surface level, didn't really have a center, and they were just kind of lost in this meaning of what fragrance, had become. And so when they connected more directly, they really quickly realized that they had this shared conviction that the industry wasn't broken financially, it was more broken from a, philosophical matter, right? And so most brands here at the time were solving for scale, not, sincerity. And they felt that fragrance, needed to slow down. But, on the other hand, in order to slow down, they decided to tackle this and move extremely, extremely quickly. It went from this idea to launch in something like, 6 weeks. It was pretty
Oh,
crazy. So 2006, they found a small space in New York and basically went to work on designing a store that, kind of looked more like a working lab as opposed to, a temple of luxury. And so they, took a different approach. They decided to compound fragrances on site. So they stripped down everything to its bare essentials. And they did this with a massive sense of urgency, not necessarily, building for an exit, but I think really just building based on a feeling that something like this needed to exist. And so, you can imagine walking into their first store, it looks more like a fragrance, house than an actual luxury store. And I think it was just so different than what was happening in the market at this time. And, I think it was a brand that's, built by people who rejected this kind of acquisition logic of their time and, eventually became one of the clearest signals that, the logic itself had changed in this industry.
yeah, I just keep going back to this idea of like, you and I meet each other, we hit it off, probably have a good conversation at a conference or an event, and then 6 weeks later we're like, yeah, let's go start a store. And I think it like just that speed of idea to launch in really a matter of weeks is really unheard of, especially when you're doing this from a perspective where it's a labor of love versus a very clear exit mentality. Right. So I think it could be different if you and I are like, hey, I think we can make a lot of money in this. Let's start something and sell it in a year. That's a different thing when they said, no, look, we don't know if anybody's ever going to sell this, but this should just exist. And when you peel back and look at it, nothing about the early decisions that they made looks like a company that was being built for an acquisition. And yet every one of them ends up being a reason why Le Labo becomes simply impossible to ignore. They had no outside capital, no prolonged brand development phase, no traditional product road mapping, no wholesale rollout, no exit plan. And the first store in Nolita really helped solidify what the brand was and wasn't. And I think like Nolita is an interesting location as well, if you know New York well, because it's not a luxury destination. It's not Fifth Avenue. It's not Soho. It's a place where people go to discover things, not really to be sold to. And as you mentioned, their store is really interesting. There's a great YouTube video, maybe we'll put in the show notes, that will kind of walk you through what it is like to be in a Le Labo store. I mean, it's very artisan. People are taking out the lavender and the florals and kind of laying it on a table and putting it together. And it feels much more like an apothecary or working lab, where something is being done as opposed to a product being displayed. And just the fixtures, like the raw wood and steel and glass, and nothing's ornate. There's no velvet, no gold. It really feels functional as opposed to a temple of luxury is what you normally see with these things. And so even their bottles are very utilitarian. It's almost as if the product itself is slightly unfinished. And what it does is it kind of has this element where you may walk past and be curious and say, what is this? Is this a coffee shop? Is this something else? But when you step in, that curiosity pulls you in even further. And they did this in a phenomenal way. And there are a few principles that they execute on that I thought were very good. The first one is that their scents are numbered. They're not named for fantasies. And so we'll get to some of those, like, Rose 21 or something like that. And they also saw themselves not really as founders of a brand, but more editors of an experience or editors of a fragrance house. And so they really didn't want to be known as the Labo people, or the Labo founders. They were just like, hey, we're here. Labo is what it is. We're going to curate this. We're going to steward, what this thing is. And they didn't try to demonstrate the craft of fragrance making for a marketing effect. They were actually compounding and making these fragrances in store. And so, everything was made on site. So, the bottles were filled to order, the labels were printed in real time with the fragrance name, the batch name, the city, and even the customer's name in the bottle. And what this did is a few things as well. As it helped slow down the purchase process for the consumer, and it made that consumer part of the process. And it turned buying a fragrance into witnessing a fragrance. It's just very, very different than anything else that's out there.
Yeah, I mean, it sounds like a pretty amazing experience, to be honest, and very different than, really any other fragrance shopping experience at the time. Does this mean that each fragrance was custom for each person, or how did that work?
Yeah, it's a good question. You would kind of think if they're compounding everything that they would be, making unique fragrances for each person. But the answer is no. They were actually incredibly disciplined instead. So if they had chosen to have custom blended fragrances, then this would have broken the consistency, would have turned the brand into a novelty, and just basically making it impossible to scale. Instead, what they had was fixed core formula for each fragrance. And what ended up being unique was when it was made, where it was made, and who it was made for. So early on, Fabrice and Eddie were the ones that were behind the counter that were testing and refining the ideas. And they created fragrances like Rose 31, which was subverted the traditional rose by making it dry, woody, almost animalic. And then you've got Vetiver 46, which was very austere. It was not mass friendly. It wasn't meant to be mass appeal. And these early Le Labo fragrances weren't designed to win over everybody, which I think was kind of the point. They wanted to have familiar notes, but that ones that were treated differently. And if you stopped optimizing for comfort and started optimizing for the actual smell, it'd be something that was very interesting. And so, when they launched this, again, after just a couple of weeks of having the idea, they didn't have a big launch party. They didn't have a big influencer campaign. They didn't have a big press blitz. At the time when most fragrance brands were inventing fantasies about these other worlds or who you could become, Le Labo was listing batch numbers and ingredients. And it wasn't trying to tell you who you could be. It was just telling you what it was. And they really relied on traffic in Nolita and word of mouth. And they would have people who would stop by and then bring their friends saying, hey, you have to see this. And so their growth, their launch was really slow. It was socially motivated. It was very credible. And they didn't try to explain kind of who they were initially. They just let people ask questions about what the experience was and who they were.
Yeah, I mean, from my research, it seems that the reaction from consumers was kind of mixed, right? I mean, some people didn't get it and they were just kind of craving that traditional luxury, dynamic. And this store wasn't for them, obviously, right? But the people that did get it, they really talked about it a lot with their friends. They came back and kind of treated it as if it was, their place. And so without really knowing it at the time, what they were doing with this one store was proving that, if we treated fragrance like a craft again in a public setting, we would get people to come back, draw attention, and they would tell their friends, right? And so I think, what this proved is that people slowed down and paid attention and attached the meaning to what was there in this first store. And so they felt that being kind of unoptimized in this experiment setting was something that was, really kind of able to build upon and enable them to kind of, expand despite being a small store and, having this heavy founder involvement. And so they felt that, the store was successful enough to keep going. But, this, I think, success didn't necessarily immediately trigger expansion thoughts, right? It triggered more confidence. And so by 2008, they still didn't have, lines out the door or explosive sales. But what they did have is some very, very loyal customers, right? And so instead, they kept saying that, their customers were coming back, and kind of that ritual of the sale experience, didn't feel stale on the second or third visit for their customers. And so, I think this told them that there wasn't this kind of one-off curiosity purchase, that they had, real loyal customers. And so, they started to add a small number of people to train them to support production and retail operations. But, they still weren't doing any marketing or, really focused on growth. And so by early 2010s, they had, actually expanded into multiple stores. The first one was in New York, and then a handful across, global cities. And so they kind of, I think, sought to treat these stores as local outposts, not clones of the one they had in Nolita. And so they emphasized, in-store compounding and labeling, and, they minimize overall SKU expansion. And so what they wanted to protect against, in hindsight, I think, was overexposure of the brand and a loss of ritual, or kind of just turning into this, showroom instead of a workspace. And so when they opened another store, it wasn't about just more distribution. It was about, can this still feel real here? And can we, craft this experience here? And so as they began to expand their store count into the high single digits, they recognized that they needed, better infrastructure. They needed a stronger back end, more consistent training, a reliable supply chain. And, they began to kind of professionalize everything quietly. And so they were still very much founder led. They were still, very private, but they were a bit allergic to the growth theater. And so their hiring philosophy was really about finding people who would help them preserve what they had built, as opposed to people that could help them scale faster. And I think this is kind of a bit counterintuitive, but really, kind of honed in on that notion of staying true to the craft that they really, originally set out to build.
Yeah, that's a great way to look at it. And the way you grow your team determines how you're going to grow your business. And I think what's interesting to me is the product strategy. And I think we should dive in that for a little bit more detail. So generally speaking, they had about 15 to 20 fine fragrances in their permanent collections, but they also had a small number of city exclusives. So meaning you couldn't get the same fragrance in London that you were getting in New York. And it was unique to that city or unique to that store. And in general, their products are luxury products. So a 30 milliliter bottle often sells for over $200. So it's, again, not a small impulse purchase, at least not for me. It'd be something you'd have to go like, okay, yeah, I'm really bought into this. But they had this small restrained line of like body care products like soaps, lotions, shampoos, candles. But really the most important thing is that they weren't focused on what you would expect a fragrance platform to be, which was really focused on seasonal scent churn or constant flankers or celebrity times. There's no pumpkin spice latte type, fragrances out there with a Labo. And when they introduced a fragrance, each one was expected to stand on its own and earn its place in the portfolio. Otherwise, they got rid of it. And they didn't lean into mass marketing with the fragrances. So they had to kind of find their own audience with each fragrance. And so generally speaking, they focused on woods, resins, musks, leather, kind of very dry, austere notes, as opposed to sweet floral or things that make you think you're immediately pretty type of fragrances that were common in mass market department stores. So inherently, these are very, very different than what you'd expect to see at a Macy's or a Nordstrom. And so as a result of doing this, they inadvertently started to avoid obvious gender coding and hyper trendy scents. And their clientele was equally strong among men and women, and really resonated with people who just disliked the traditional fragrance shopping. And so, as you can imagine, where their stores were, their clients were more urban. They tended to be more creative or skeptical of overt luxury. And what was important about their consumer as they got to know them is that they didn't buy their products to smell good. They bought them to smell intentional. I think this authentic baseline they had created is what led them to have a company-defining moment when they launched Santal 33, which is a famous scent that they have. And it was a fragrance that was not engineered to be a hit, right? It was meant to be kind of, another one in the collection. It was inspired by the American West, so think like Marlboro Man, open landscapes, those sorts of things. And it was built around like a sandalwood, leather, dry spice sort of structure. And it was very, very simple, but emotionally very distinct from what was out there. And at its launch, it was really one of many fragrances. It wasn't positioned as a hero SKU and wasn't promoted more than the others, but it took off because it did a few things very well all at once. First is it smelled unlike anything else that had been in the market, and it presented differently on different people. So it smelled different on you than it smelled on me, or someone else was wearing it. And it was instantly recognizable as a result, but it was very hard to describe. And as a result, it became a signal scent. So not a signature scent, but a signal scent, a way for people to say, I'm part of a creative class without having to say anything. And so by the early 2010s, Santel 33 was everywhere in specific cities, especially in New York or the creative hubs. And it became shorthand for, oh, you're part of our creative culture. And, it wasn't that they had this mass adoption by lots of people and, which is what legacy fragrances have been looking for, but instead they had very dense adoption in the right places, which made it feel much bigger than it actually was.
Yeah, I mean, I think this is a great segue to 2014, where they basically had grown from one store in New York City to about 30 stores globally. And each one of these locations were high impact stores. They were, very much still experience led. We don't necessarily know what their revenue was at this time, but, we estimate it was around $30 million by 2014. And so while this wasn't massive for a conglomerate from, that type of dynamic, it was still, extremely high margin, highly defensible. And, most importantly, I think it was culturally outsized, right? And so they punched, much harder than their weight would have suggested, just because this experience led dynamic at each one of their stores was really kind of, custom tailored to each customer that walked in one of those stores. And so I think what's remarkable is by the time they had multiple stores and real revenue and global relevance, it still didn't look like the kind of company conglomerates used to buy, right? And so this kind of raises that real question, when did Estee Lauder realize this wasn't a risk, but a real asset that they should look into?
Yeah, that's a great question. And I think by the early 2010s, Le Labo wasn't a cult favorite, right? It is very different, like you said, than the other acquisitions that people would normally look for. But it was quietly being noticed by retailers, industry insiders, and by a lot of the same conglomerates that had once dismissed this kind of brand as being too narrow to actually matter. And at the same time, Estee Lauder was also a very different company than it had been in the 90s. And there were a few things that were true simultaneously. They had really mastered scale. They had built global distribution, and they had built a really good playbook for managing celebrity and designer fragrance licenses. But they had also proven internally that they could buy niche credibility, and that niche credibility could survive ownership, which is why the Frederic Malle matters so much. So by 2013, Frederic Malle had been owned for about 7 years, and it had not been diluted from a prestige perspective. I mean, in fact, it had grown steadily, but not explosively. So Frederic Malle is probably like $100 million plus brand today, which sounds small until you realize that it's been doing that without any of the normal tricks that you would usually have. So no chasing scale, no chasing celebrities. They did it without burning their authority. And this is exactly what mattered when Estee Lauder was looking at Le Labo, because they already had proof that taste could compound over decades. You didn't have to have massive marketing budgets to make something a lot bigger than what you purchased it. And so it really helped Estee Lauder answer a question of, can we own a brand built on restraint or authority or just good taste and not destroy it, which is actually a really hard question for a lot of conglomerates to answer. But for them, the answer was yes. And that changed what they were willing to look at. And so Le Labo became attractive because it solved a problem that Estee Lauder knew that they had at the time, which was by 2013, 2014, younger consumers were disengaging from traditional fragrances. Celebrity-driven launches were losing cultural impact, and then just department store fragrance traffic was declining. Those fragrances felt interchangeable, but Le Labo offered something that Estee Lauder couldn't build internally. It was a living brand. It had cultural gravity. It was this retail model that created belief, not just conversation, and a consumer base that was really trusting the brand and not just the logo. And so really Labo had also proven out that they could scale the brand without losing coherence of who they were. So they'd done a lot of those important things before.
Yeah, I mean, what's interesting to me about the founders of Labo is that they weren't necessarily actively looking to, sell the business, right? They were open to the right partner. And so in the mid 2010s, Labo had really achieved meaningful global demand. And as a result of its store count and operations, they were, definitely beginning to become more complex, right? Supply chain rigor was mattering more and more than in years past because, of course, supply chain would result, in potentially breaking the experience that was so core to what they were doing. And so it was kind of like at this point where they realized staying small was no longer realistic, and that scaling alone risked kind of recreating the system that they had originally rejected, right? And so I think they didn't necessarily feel maxed out from a creative standpoint, but they felt, exposed operationally, right? I mean, you can imagine as you grow past 30 stores, there's just so much complexity that goes into making sure you have, the right ingredients and product at each store. And so other luxury players were of course aware of Labo and were paying attention, but I think Estee Lauder had two unique advantages in the eyes of the founders in terms of, one, the credibility with niche brands in the case of Frederic Malle, and number two, culture, patience to not, force the growth of a brand that, they kind of thought would kill the culture and the roots of what they had created.
Yeah, this kind of sounds like a unique full circle moment because they had rejected the fragrance industry and the conglomerates that had defined it for so long. And here they are selling their business to a conglomerate. And I know that they had talked about wanting to refresh and reframe how the industry looked at these things. Do you think that this was them selling out or recognizing that they had been successful in reshaping the industry?
Yeah, I mean, they didn't go out and try to find a buyer, right? And so I think it was more so for them, like trying to find a steward of the brand that could help them where they were weak, right? I mean, we just mentioned supply chain complexities that I think was really top of mind for them, and just operational complexity as they grew. And so, I don't think they were handing off a growth engine. I think they were kind of handing off a belief system and asking someone else to protect it. And so I think operationally, they had to choose to emphasize small batch production at scale. So, in-store compounding was really the ritual here, and it wasn't obviously for efficiency because there's a lot more efficient ways to, produce their products. And so what they were looking for was global expansion with, capabilities that would enable them not to have a kind of full industrial kind of homogenous product. They wanted to stay unique to their roots. And so their supply chain, I think, really became a way that they showed their beliefs as opposed to something that was optimized for, cost or throughput, right? Which is, obviously a lot different than the way people look at acquisitions in general is, hey, how do we optimize cost, or how do we, optimize for throughput here? And so I think that was really kind of core. And if you look at the emotional side of the deal, since Eddie and Fabrice were, I think really deeply skeptical of over expansion or marketing driven decision making, they were less interested in a sale price or a scale opportunity. And so for them, in my mind, as I think about how they explored this, they were probably way more about the alignment on what they were able to maintain, right? And so they prioritized the idea of preserving the creative autonomy, protection of that retail ritual that they created and that their customers came to love, and guaranteeing that there was no pressure to chase, mass market behavior. And so, they didn't want a buyer who would make the Labo louder, but someone who would help make it last, which is why they chose Estee Lauder. And they sold for about $60 million, which, for two, smaller kind of industry insiders at the time, that to me seems like a pretty amazing outcome for them.
I'd take $60 million. I don't know about you. Yeah, I think that the initial reaction to this acquisition inside the industry was pretty muted at the beginning. People felt that this was another prestige brand hedge or credibility acquisition, and for good reason. I mean, if you look at this brand, it's still sub $100 million. It wasn't a massive growth engine at the time, and it didn't fit within the traditional fragrance math. But following the acquisition, Le Labo didn't behave like a expected prestige side project. They continued to open stores globally, and they really deepened the cultural relevance and strengthened the core hero products. So, Santal 33 became even more important, but they did this without resulting in overexposure. And even though Le Labo wasn't everywhere, where it was unavoidable. And so they had this cultural saturation in the right rooms, in the right places. And eventually the rest of the industry began to recognize that this wasn't a hedge. This was a new type of asset. This was actually something that was valuable. And for founders as well, Le Labo changed how founders talked about fragrance. And as you would hear people pitching things or talking about, building a company, they often cited Le Labo as a case study, not just as a brand they admired, but of the type of exit that they wanted. And so they reframed founder ambition, where you could build something that was opinionated and reject universality, but still be rewarded with an exit. And so by 2016, 2017, conglomerates start to see that the Labo deal was really a watershed moment for the industry. And they realized that cultural defensibility outlasts launch velocity, and that restraint can create more value than just a breadth of products. And so they started to look after and buy identity-rich brands over, marketing optimized ones. And so whereas Frederic Malle taught conglomerates that they could own taste without destroying it, Le Labo taught them that taste could be the growth engine. And as a result, I mean, you see what happened afterward. I mean, Maison Francis Kajirkin is purchased by LVMH in 2017. This was all about authority, not volume. They preserved the founder identity. They sought to avoid mass market distortion, which is something they wouldn't have done 3 or 4 years prior. Riedo was acquired by Puig in 2022, and they explicitly said that they were going to protect the creative autonomy, and they used scale very quietly. They prioritized cultural relevance over distribution math. And so these deals don't make sense by these other conglomerates without Le Labo as the precedent. And at first, the industry really treated Le Labo as another careful prestige acquisition. But within a few years, it became clear this wasn't about owning a beautiful brand. It was about redefining what a valuable fragrance business actually looked like.
Yeah, I mean, what's pretty amazing is the results of Le Labo kind of prove that it wasn't just a nice acquisition story, but I think a driver of meaningful results for Estee Lauder, right? I mean, this niche brand is estimated at, between 250 and 400 million in revenue right now. So while not Estee Lauder's biggest fragrance brand by volume, it's definitely much larger than most niche fragrance brands would ever become, and prove that they could, get big without kind of changing their core operating philosophy. And I think it's definitely one of Estee Lauder's most kind of strategically important brands. It's kind of this benchmark for managing other founder-driven brands, and it's a halo brand that lifts the credibility of Estee Lauder's entire fragrance portfolio. And so, I think this credibility anchor with extremely strong economics, which is a relatively new role for larger beauty conglomerates, but it's one that only exists because Le Labo and Estee Lauder proved it could work. And so you can imagine how Estee Lauder kind of, utilized this founder-friendly type of acquisition for other deals that it did in the future, right?
Yeah, absolutely. And I think it also proves out a very specific playbook for authenticity-driven acquisitions that other companies started to follow. So most of the work that Estee Lauder did was really behind the scenes. They added global supply chain resilience, they professionalized manufacturing and QA at scale, and they also helped with things like real estate and expansion that way. These are the sorts of things that would have been very difficult for Le Labo to build alone without compromising the overall experience. And in terms of what they intentionally didn't change, they kept the product philosophy and the retail experience basically the same. So even here, products like Santal 33, which have been protected from overexposure, is highly unusual for an acquisition of a company at this scale. And whereas before the Labo, the dominant acquisition thesis was we buy scale, we normalize it, we grow faster. Le Labo validated that there was a different equation, right? You buy authenticity, you protect it, you nurture it, and you let it compound at its own pace over time. And post Le Labo, you can see the ripple effects clearly. I mean, there's a greater emphasis on founder control post deal. There's more patience around the growth curves and the math that goes into those. And there's more willingness to keep brands culturally narrow, less pressure to make them immediately plug into the machine. And what Le Labo proved wasn't just that authenticity could survive an acquisition. It proved that authenticity could become one of the most valuable things a conglomerate could own. And so really, once that belief starts to take hold, you don't just change what you buy, you change what success looks like for founders building the next generation of brands.
Yeah, I mean, I think this has been a really interesting episode in terms of how acquisition logic and math has changed, right? I mean, what do you think non-fragrance acquirers or founders should take away from this?
I mean, there's so much stuff here. I think that this is a great blueprint of how acquirers should buy startups. I think so oftentimes they buy it and try to mess with the front end and miss, they end up ruining a lot of the value of what they purchased. But specifically for founders, I think Le Labo didn't change how fragrance brands are built, but it changed what acquirers thought was worth buying. And that's a much harder thing to undo. And so I think that's like the paradigm shift of really what stuck with me for this episode. A few takeaways I had for founders is just how important it is to build coherence over coverage. And Le Labo didn't win by being everywhere. It won by being unmistakable itself wherever it showed up. So much better to be, narrow and very deep than, an inch deep and a mile wide. If your brand can't explain what it refuses to do, it's really not defensible. And this cultural density really beats this broad awareness. Dense adoption in a narrow cohort is really more valuable than shallow awareness everywhere. And you don't have to build for an exit, but you have to be legible at an exit. And so Le Labo wasn't built to sell, but by the time it had very clear principles, repeatable processes, and proven durability. And so, I think the big lesson for me was that the best exits don't come from optimizing for buyers, but it comes by making the acquisition logic very obvious for acquirers.
Yeah, and I mean, I think for acquirers, really my takeaway is that authenticity is measurable, right? The Labo kind of reframed diligent questions from how fast can this scale to what breaks if we push it, right? And then they kind of really, optimize for back end scale and kind of front end restraint, right? And so Estee Lauder, in my opinion, succeeded because it scaled the supply chain side of the business, compliance, and real estate, but left kind of that product philosophy and retail ritual intact. And I think the other side of it is that authority brands are portfolio anchors, not growth hacks, right? So the Labo isn't, Estee Lauder's biggest brand, but it's definitely one of the most strategically important brands in their portfolio. And so, some acquisitions exist to generate cash. Others, I think, exist to set the ceiling of credibility for the entire portfolio, right? Because the Labo is definitely one of those more, anchored brands within the Estee Lauder portfolio that a lot of other people in the fragrance industry look up to. So, I mean, there are so many takeaways here on this episode. We've got to ask you to now like and subscribe to Ecommerce on Tap. We thank you again for listening in and tuning into this episode. Aaron, before we leave our listeners, is there any last tidbit you want to share?
I just think that I have loved going through fragrance so far, and I can't believe we've got, more episodes coming up on this topic. But Le Labo, what an important story that just shows how one deal can reshape an industry. And so I really appreciate kind of going into this and learning about, the right way to acquire an authentic brand versus, a plug and play that may look good in a spreadsheet.
I agree. Well, thanks again for tuning into E-commerce on Tap, brought to you by Sourcify and Izba. We'll see you next time.